This is Robert Kraft, and I'm your host on SNN.Network. And today in this Wall Street View, I have Aaron Dunn, who is the VP and Senior Equities Analyst at Keystone Financial. Aaron, welcome to this Wall Street View.
Thank you. Happy to be here.
It's great to have you on. So to get started here, let's get your background. How'd you get started in the world of finance, and then eventually to go and work at Keystone Financial?
Sure. So I've had an interest in investing ever since I've been a kid. But when I started college, I actually began in engineering. So I did an engineering program. I went to work as an intern for a startup that was looking to do an IPO, and doing some of the office work there rekindled my interest in the market. So I went back to school, did a business program, started working in finance, but actually originally it was in sales, although my interest was in equity research and researching stocks. So I basically just started doing that on the side without getting paid for it. Finished my degree in commerce, did my Canadian securities course, which in the US is, I believe it's the equivalent to the Series 7. And what really where the opportunity was for me was when income trusts started to get popular up here in Canada, which was in the early 2000s, mid 2000s. Nobody really knew much about them. There wasn't much coverage on them. So I started digging deep into those companies, and that's really what got me into equity research. So from there, I signed up for the Chartered Financial Analyst program, completed that. And that brings me to where I am right now. So I've been doing this for well over 10 years now.
Great. And so the main reason I brought you on today, and I had Ryan, your colleague, Ryan Irvin, on the podcast, I think it was last year now at this point. And, what I've been following your blog now for a while, and you guys put out a post, and it's almost 6 months old, but that's okay. It was a blog that's called 4 Categories of Pot Stocks. Now, I mean, obviously, marijuana, cannabis has been just littering our airwaves now, and for the last few years, and the business has really matured in the industry itself. So I thought it would be interesting to do an educational interview that really goes into the categorization for this industry. So with that, this is the perfect storm. You guys came out with this article. And so for me, I wanted to know for our audience as well, is what are the various categories that you sectioned off for the cannabis sector in this piece?
Sure. So there's 4 categories that we identified amongst Canadian listed companies. And those are producers, obviously. That's the biggest category. The vast majority of companies fall into that category as well. Another category are service companies. So these are companies that provide services to the industry. They may be technology services, equipment rental, consulting, financing, even facility rental and management. There's also the pharma and the clinics category. So these are companies that continue to be focused on the medicinal market. Many of them are building physical clinics that people would come into, talk to the professionals there and get an idea of what types of cannabis products would be helpful to them. And then finally, there's the ancillary products and derivatives category. So these are companies that specialize in things like paraphernalia, different types of selling platforms as well. Namaste is a company up here that has an online selling platform for paraphernalia and different items. So they would fall into that category. Also, companies that are in the edibles market or in the cannabis infused beverages market.
Got it. And for full disclosure, do you personally or does Keystone own any shares in Namaste?
No.
Perfect. So my next question then is for my U.S. listeners and viewers here, do these categories apply as well for the U.S. market, or is this just specifically for Canada?
Specifically for Canada. So one thing about the Canadian market is that a fifth category that we could see that we could identify as well potentially in the future would be retail operations. So companies that focus on the retail side of it. But up here, the regulation for distribution is quite high. It's not really hashed out yet completely. So each of our provinces take control over retail distribution. Essentially, the way that it works is producers have to sell to a regulatory body, and then that regulatory body licenses retail outlets, and essentially resells to those retailers who then sell to the consumers. So we don't really have a retail market up here in Canada yet in terms of specifically what I mean are companies that actually own physical brick and mortar stores where they're selling cannabis. There are companies that are doing that, and there are brick and mortar stores, but there's only one company currently that's public that is doing that, and the majority of their operations are actually in liquor retail sales, but they're the one public company that is also focusing on cannabis retail sales. So as the market continues to evolve up here, I think that's another category that we would add on. There's just nothing there to really fill that category with right now.
Gotcha. Okay, so that's pretty much the main difference in categories if you had to compare Canada and the U.S. is that the U.S. has more retail stores at this point, and Canada is still working its way through, correct?
Certainly, yeah. There's a couple big companies down in the U.S. that you'd call them more integrated cannabis companies. So they do production and retail operations, and we're likely going to have that up here as well in Canada eventually, but we just don't have it yet.
Got it. So then, my next question is, why did you separate the cannabis sector into these 4 different categories for Canada?
It just seemed like the natural way to go about separating them. So obviously there's the producer category. That is by far the most important. So the majority of the companies fall into that category. Almost all of the market capitalization of the sector falls into that category. And any company that's generating significant amount of revenue generally falls into that category as well. So that's fairly obvious there. The service companies, I mean, that's just a way of essentially categorizing businesses that are providing services to the industry, not necessarily products and services to the user, but actually to the industry to help producers, achieve whatever goal they're trying to achieve. So one of the companies that falls into that group would be company Canex. Once again, neither myself or Keystone owning any of that, but a bigger operation for them is to provide facilities rental and management to cannabis producers. So that service space really kind of encompasses a wide range of different operations, but essentially it's all services being provided to the industry and not to end users. And then there's the clinics and the pharma. There's actually quite a few that fall into that category, and they differentiate themselves from the producers with respect to what they're ultimately trying to achieve, which is to stay in the medicinal market. They're not at all looking at the recreational space. They just want to stay in the medicinal market. As I said, many of them actually own physical clinics that people can go into and talk to professionals there. And then the derivatives and the derivatives category as well. That just kind of encompasses a lot of different companies that are providing products and services to the user that are related to cannabis. So, looking at those 4 categories, that pretty much encompasses everything that we've seen in the market. So part of what we've done is researching cannabis is not a big part of what we do because we look at a wide range of different industries and companies. Essentially, we're just trying to find the best investment opportunities for our clients based on the revenues and cash flows of a business, value and other factors as well, sustainable growth. So cannabis is a space that we're interested in because we see a lot of future growth, but it's one of many that we look at right now. So there are interesting companies that are coming up in that space, but it's still up here in Canada. There's a lot of evolution that's going to take place over the next couple of years. I mean, we've less than a year into legalization here, and products like edibles and other types of infused beverages still aren't legal up here in Canada. That's going to happen in the fall of this year. So a lot of growth.
So you've already alluded to this already in this interview and mentioned the fact that there's so many more producer companies in Canada right now. So my question is why are there so much more producer companies than say the service, pharma, ancillary, and derivative companies combined?
So really, I think basically what it comes down to is that's where the money is right now. That's where the market is. So if you look at if you look at what legalization has done, is it's basically opened up a market for people to produce and sell in the recreational space, right? The pharma and the clinic side of it, I mean, medicinal marijuana was already legal up here in Canada, so a lot of that business still could have existed before the legalization of recreational marijuana. But there's a huge market. I believe it's about 9 billion is what they estimate the total cannabis market is, just with respect to consumption of raw cannabis. So that's a huge market that has to be filled, and that begins with production, moving production from the black market into the legal market. You know, paraphernalia that was already legal. You could already sell that. Like I said, medicinal. You could already get involved in the medicinal space. So really, the action, the money right now is in production, and I think that's where the excitement is, and so that's where the companies are. But it's not even a matter of, I mean, when we did the initial report, there was about 109 Canadian listed companies that operated in the cannabis space, and 55 of those, I believe, were producers. That was back in October of 2018. So we updated those numbers just in May of this year, and the number's grown from 109 to 178. And I believe that the majority of those new entrants are also producers as well, or want to be producers, or not producing right now, but with an objective of being producers. So certainly the majority of the companies are producers, but when you look at it on a market capitalization basis, the combined market capitalization of all cannabis companies listed in Canada right now is about $55 billion. Well, about 50 billion of those are just producers. So the entire market in terms of the investment industry is really in production right now. Now that's probably gonna change over time. There'll be more funds flow and more ideas in other parts of the cannabis space. But for right now, the action has definitely been with producers.
And it's still such a nascent industry. I mean, we don't even know. Next year when we do our, after we've done 5 interviews already, and we're updating everyone, there could be 10 categories where there's all these new different industries or sectors within cannabis that could be opening up. And I have to ask too, because I know you specifically, this is a Canadian report that you guys worked on, but just from your experience and what you've seen, I mean, do you see similar type of categorization breakdown if we were to just use these 4, not counting retail, in the US as well for the cannabis sector?
I think it would be similar, yes, because really those 4 categories, or you'd say 5 if you added retail on there, really they encapsulate essentially all of the activities within the cannabis space. And the big retailers that we see down in the US are often also producers as well. So you could categorize them as producers too. Now there are some companies that are doing some different things, or trying to do some different things in the US that we haven't seen up here. There's one company that we looked at that was it bought a town to essentially turn it into a marijuana-based theme park, so to speak. Not anything we would want to invest in. I mean, I think it was all hype and wasn't really anything fundamental behind it. But there are things going on in the U.S. that are a little different than up here in Canada. But things change all the time, so maybe we'll have a cannabis theme park up here too.
A cannabis theme park. I'm sure it's going to be open 420 to 420. That's a terrible joke, and I apologize for even making it. But so how would you then rank each category from low to high for barrier to entry?
Well, for barrier to entry, certainly the producers would have the highest barrier to entry, because you need to have a license to produce. And in addition to having the license, you also need to invest money into building a facility. You need to have skilled people in place. Now, there are a lot of companies in the producer category that we think that ultimately they will be very unsuccessful. They will not be able to do what it is they're planning on doing. And the reason for that is that most of even within the producer space, as I said, about well over 90% of the market cap is in producers. Well over 90% of the market cap in the producer category is just in the top 10 producers. So that's really where all the action is. And these are the companies that were also big producers in the medicinal space previous to legalization. So they're the companies that have the track record and the experience of producing mass scales of cannabis, high quality cannabis at a low cost point. So it's difficult to compete with them, but you need to have a license. you also need to be able to produce, to have the production facility. So there's a big capital cost to that as well. Beyond that, I would say that the service companies are very mixed, because you'll have some companies that are providing technology services, like helping organize distribution or inventory management specifically for cannabis companies, all the way over to companies that own facilities and then rent those facilities out, or specialize in providing security. So there's a big mix there. I would say that most of the companies, as I said before, the vast majority of the companies outside of the producer space, very few of them are actually generating anything resembling meaningful amount of revenue yet. Most of them are just idea companies. Some of them, the majority of them probably are not going to end up going anywhere. But I think that it's, in the service area, it's a very wide range. Mm-hmm. In the pharma and clinic space, I think that would be just overall the next highest barrier to entry. Just generally speaking, because once again, these are companies that have to invest capital in building these clinics. You need to have qualified people in the clinics to give the advice that they're giving. So that being said, however, just because a company is classified in that space doesn't mean they've actually successfully built clinics and built up a loyal customer base yet. So there's a few companies that have made some inroads there. They're generating meaningful revenue from it. None of them are profitable yet, but for those that are actually doing it and doing it well, I think that there is a decent barrier to entry there. And then in the derivative and ancillary space, once again, it's really all over the board there. I mean, you have a couple of companies that have invested, a good amount of capital into their infrastructure, and then some companies that just basically have an idea that they're trying to move forward with. So certainly 100% though, the producers, if you're looking at barrier to entry, the producers have the highest. Mm-hmm. Right now, I believe that they're starting to tighten up the rules for getting licenses. So anybody who already has a license is already at a big advantage. And then as well, if you look at the plans of producers here up in Canada, we still have a fairly limited market here. I believe that the estimate is about 1 million kilograms per year of consumption. Well, just the top 10 producers alone have plans to ramp up their production to well over twice that per year. So there is still a limited market here. And I think that once you get to a point where the market starts to be saturated by legal production, that's when it's really going to come down to who can mass produce high quality product at a low price point.
Got it. So we're going producers, services, pharma clinics, ancillary edibles. That's kind of your high to low when it comes to barriers to entry.
Yeah, I would say producers, some of the service, but producers, some of the service, the pharma clinic, and then the others. When it comes to service, when it comes to ancillary and derivative, I mean, there's just such a difference between the various companies. It's hard to really give them one classification in terms of barrier to entry. But yeah, I mean, you've got it pretty well laid down.
Got it. So my last question to you is, you mentioned earlier that Keystone, Keystone, the company hasn't made any recommendations for any cannabis companies. You kind of did this research report to, it's one of those industries you can't ignore anymore. It's here to stay. It's up there. So for you, for the firm, and for you as well, I mean, you're analyzing most of these businesses. At what point do they become now something that's investable for the firm, or for you guys to even make a recommendation?
For us, we need to see profitability, or a very visible near-term pathway to profitability. The vast majority of the companies that are listed right now aren't even generating meaningful revenue. So it's very early stage. There's a small group of companies that are generating strong levels of revenue, and that revenue is growing, which is great. None of them are even close to being profitable. So our focus is always on cash flow generating businesses. We want to see companies that can produce value on the bottom line, positive earnings, positive cash flow, and then reinvest that money back into the company for future growth. So there's a small group of companies that may hit that bar over the next 12 to 24 months, but they're still a fair ways away from it. So what we did is we put out our Keystone's Cannabis report in October of 2018. And essentially what that was is us looking at the market, what it's worth, what the plans of producers are to ramp up production over the next several years, but then looking at every single one of those 109 companies, looking at the financials and determining which ones have the best pathways to profitability. So there are a small group. I don't expect anything is going to happen in terms of transitioning to profit in the next 6 to 12 months, but potentially the next 12 to 24 months. And if that happens and we continue to see good growth and the valuations aren't completely unreasonable, then we would consider a recommendation at that point.
Got it. So Aaron, for more information about you and Keystone Financial, where can my audience go and find everything they need to know?
Yeah, the best place to go would be to our website. So that's www.keystocks.com, KEYSTOCKS.com. So you can get all the information on the company there, but we also have a lot of free educational content that we provide, blog articles. We have a podcast, Stock Talk podcast with myself and my colleague, Ryan Irvine. So we talk about individual companies, we talk about the market, lots of videos. So you can go there, you can learn anything you want about the company, but also you can learn how to invest as well.
Awesome. Well, Aaron, thank you for joining me today, and look forward to the next update.
Thank you. It's a pleasure.